All righty, traders. This is Blake Morrow. You are listening to the Morning Edge. Did I sound like a radio host? Is that what that sounded like? Good morning, traders. This is Blake Morrow with the Morning Edge. I want to welcome you to today's. Now that sounds kind of like it, doesn't it? Anyway, Brand said totally. Yeah, I mean, I've got a great face for radio. That's what they keep telling me. That means I'm ugly as all get out, and I'm good at my voice sounds okay. So, all right. Well, let's get to it. We got a lot to talk about. And actually, one of the big things that's happening right now is the OPEC news that's driving crude oil prices higher. That's actually driven. Hold on, let me get over to crude really quick. Where are we? Okay, there we go. So that's driving crude to the top of this resistance zone. This is obviously very critical here because we are at levels that if we break, we're going to 80. But it's pushed all, like the dollar Canadian down to support, which I actually started buying some dollar CAD. Just if you guys are not in the chat rooms, just letting you know that that I am buying some down here. But we have to hold. I mean, to be completely frank here, if we start breaking out in crude, above 80, and this dollar Canadian is going to come down, towards 124. 124.50. So this is, basically this is your risk reward trade. The good risk reward to be short crude, long dollar CAD. It's right at these levels. I mean, that's it, right? Doesn't mean that it's going to work. I'm just saying that this is, if we're going to turn, we're going to turn at these levels. So I think you have to just keep that in mind, moving forward. Okay. All right. So let's get through the majors really quick. And I want to say it's nice to be back with you guys. I know, it's probably nice to have a break away from Blake. So hopefully you guys enjoyed that. But I think that overall, I just think that it's nice to be, I'm just saying, I think personally, it's nice to be back with you guys. So anyway, the euro dollar. Previous support should act as current resistance. Do you see that inverted head and shoulder pattern? I guess Amanda had been chatting, pointing this out in the chat room. I didn't get a chance. When I get up in the morning, I don't have enough time to go back and look through everything. So I can't see what everybody's been talking about. But she had posted something on Twitter that, she was looking at this as well. Yeah, it's very obvious, inverted head and shoulder pattern, but where it finishes up and where it should target is the underside of the previous support, which comes in at 116.63. So that should be really key resistance. And you know what? I know intraday that we might have some bullish momentum, but you got to sell into that. All right. You have to sell into the strength, if that makes any sense. Hold on really quick. Okay. So anyway, that is that's previous support, current resistance. Now that should offer upside resistance on any rally. And if given an opportunity, I'd be a seller up there. You have to. It's the best risk reward to trade into this bearish trend. The fact that we broke these lows, technically, that's not a bullish sign for the euro. That's why, I look at the euro dollar move and I look at the dollar index, and that's why I'm buying dollar pullbacks. You know what I mean? It's because technically we continue to forge out higher highs in the dollar. I still think we have some room to go. Now, support for the dollar index is right here. We should not break that today. 115, whatever that is, 80, let's just call it 115.85. We shouldn't break that today. Okay. It's not big support. It's just support. bigger support is going to be down here, 116 or 115.62, but 115.60. That's going to be bigger support. Okay. Let's go over the sterling. So big resistance at the 38% retracement. If you guys read the analysis from this morning, oh, did you guys notice this, by the way? I'm going to be jumping on this live blog this week, by the way. Right here for the cable, 38% retracement at 136.04, right there. Well, if you were long, I hope you were, paying attention, because that's obviously big resistance. So that's for today. Now, I'm not going to write down that number. Well, I mean, I can. I can. Okay. But we've got to reference that 50% retracement, that previous support, just in case we break higher. So that's 136.63. And you know what? I don't know if you see it, but we're making lower highs, lower lows, right? So that's bearish. Obviously, support from here today is going to be down here at 135. Well, it's today's low is 135.30, right? That should hold today. Well, see that spike high right there? It's 135.20. I actually would give that as support. And I know we're bouncing today, but it's a bearish trend, right? It is. Okay. Aussie. Now, last week, I had drawn something like this. Hold on really quick. Something like this, right? Like a flag pattern, and, try to break down relative strength, looked like it was divergent. Then we broke back above this 72.20. I jumped in the chat room on, I want to say Thursday, before I started my drive back from California. And I was like, oh, we keep knocking our head up against there, but we broke above that. So now this is resistance here. This is the 50% retracement. You can see all these highs through here that should offer resistance today. 73.25. Okay. And we could get up there. But the Aussie is still in this big range. So support. Okay. I have another bid here in the dollar Canadian, just a little bit lower. Just a little wee bit lower. Wee bit. Come on down. Come on down. Hold on. Sorry. Looking at the dollar Canadian, I'm just waiting for a little bit further down to the 78% retracement. Anyway, Aussie should have some pretty good support right here intraday around the 72-cent level. I don't think we're going to see below that, even though I think 71.70 is really key support. I think 72 cents is going to, any dip towards 72 cents is going to offer support. So 71.70, 72. I doubt we're going to get down there. I'm going to keep us in range. Kiwi. I have an order to sell New Zealand dollars in about 20 pips. So if we can make a move up to 69, well, 70 cents should hold, but 69.90 should actually be resistance today. I'm going to write down the round number, but I think you want to sell into that, because this is the right here is the 38% retracement that's holding thus far, right? So even, well, I'm going to write down, not that. I'm going to write down 69.90 should be resistance. Support today will be any dip down towards here. I don't think we're going to get down there. I would say 69.25 should offer support today. 69.20. Okay. I'm going to keep us range bound here. Dollar Canadian, big support at 125.80. I'm trying to buy a little bit more down there. Remember, this is more of a crude play. I'm doing this as a crude proxy. 125.80. That is key. And we're almost there. I mean, if this bullish trend is to continue, with these higher lows, we were unable to make higher highs though, but you guys know how important that 129.50 level was. That was major previous support, current resistance. So it's not surprising that we couldn't make a higher high in this move up, because my belief is if we broke 129.50, it's not coming back. Like, we're going a lot higher, not for a while anyway. So that's going to be support intraday. See a lot of horizontal support down here. This trend line, resistance intraday should be right here, 120. I mean, this is resistance, 126.55. So I'll write it, but my 26.55. My opinion is if we do actually break above, if we break above this intraday, we're going to squeeze higher. I just don't. It's possible because, like, let's imagine crude does its thing. We rally to this resistance here. We rally to this resistance, but we fail. And crude actually rolls over. You could actually see the dollar Canadian get a pretty big bounce, from, because I mean, this is all the sell-off that we're getting thus far, right? So anyway, just some things to think about. Okay, Swissy. So when I was gone last week, I know we had written down, 92 cents as being support. We were looking at this trend line. Wow, look at the resistance, how it held. That's a big deal, right? I think we were writing down 93.30. We had a little false breakout here. So this 93.50 is going to be really key moving forward. And now support should be 92, whatever this is. This horizontal support is. Let's just call it 92.15. Very, very critical support. Okay, dollar Norway. Now, you guys know I've been looking at this big megaphone pattern, right? That held. And you know what's a shame is I didn't patiently sit it through. I think we were at, well, where did I close the pattern in play? 874. I should have let it ride out to 880. I think the reason why I closed it out here is I was like, well, how about if we don't make it? Oh, that's what it was. Well, first of all, I was traveling, but second of all, if you notice at that point in time, I was like, oh crap, did we just make a false, a high, false breakout? I'm like, well, I've been traveling. So I was like, yeah, I'm just going to pull it off. I think that's right where I exited my pattern in play. And I actually did take off my long there. Personally, we reached for 880. Now we're back at support. This is the 200-day moving average. Huge support here. Let's call it 855, right? Huge support. Could we break below and go to, 851, which would be the 618 retracement? Yes, we could, especially if crude oil continues to press. But if it can't break down in this crude oil rally and crude reverses, the US dollar Norwegian krona should bounce right back up towards these highs. I mean, we should. But intraday, we're not going to do that intraday. I think intraday, resistance is going to be right there, 865. Okay. Dollar max. If you're following the dollar max, and in the chat room, I put up the possible head and shoulder pattern. Okay. I think that's key. All right. So that means resistance today is going to be 2060. Support is going to be 2041. And we're going to flop. Well, man, I think you got to buy dips, but God, this, I think while we're above the 200-day moving average, you got to be bullish now. But intraday, we could slip some, right? Dollar yen. I mean, look at how well this channel has held. And you guys know we've been looking at this channel for quite some time. We looked at, I want to say that we wrote down our resistance for the dollar yen at 112.25 because of the channel. So I think I missed it by whatever the highs here are. 112.04, 112.07, not too far off, but that is channel resistance. Okay. Now we've slipped back to, let me delete this. Let's get rid of that. And let's mark up here as support. Okay. That comes in at 110. This is called 110.70. Resistance. I think anybody who's long dollar yen, like if you got caught long up here, you're going to be happy on a rally back up towards this resistance, I think. So let's call it 111.65. I think if you get any rally towards that, you're going to be, happy to get out of it. If you're long. Okay. Dollar index, you guys know we're like pretty key support here, but I'm going to give it all the way back down towards, $93.45. Bullish, but this is critical. Actually, you know what? I'm going to take that. That's 94.50. Since we reached 94.50, this is so key. I'm actually going to flip this back to neutral for right now. But I'm going to tell you guys, if we get above 94.50, it will turn bullish, and I mean, that's going to be it. Like we get above 94.50 and, you're, like I said on the FACE webinar today, you will not want to be short the dollar on any rally above 94.50. No way, Jose. Okay. Let's take a look at gold, silver, and the S&P and Bitcoin. So the S&P, key resistance at 4,400. Support now is, well, I would assume that this spike low down at 4,300, the 4,305 should offer support intraday. 4,305, 4,400, that's key. And while we're below, right here, actually, but so let's call it 4,500. You have to stay bearish. I know we'll have resistance between here and there, but that's really resistance now. Gold's pretty messy. I mean, this is a messy chart. And I'm just gonna say, well, while we're below there, and let's get rid of these. Let's remove that. While we're below 1780, you can see some horizontal support here. That's obviously what held us. In retrospect, I didn't think I wouldn't guess that I would not have guessed that would have held. But 1780, 1720, and let's just keep it simple. I still think while we're below 1780, you got to remain bearish though. Actually, probably while we're below 1800, but silver, yeah, this gave us a nice move, but so I mean, this is right here. That's key for us to hold. And we did we talked about this? Remember before I left? I know we talked about this, so I'm gonna clarify here. Remember we talked about if we break through 2190, right? You break through 2190. There's all this horizontal support down here, so you wait for a dip below that spike low. You buy it at 2160, whatever, 65, I think, and then go long. I hope some of you guys did that. I mean, we did, get down to 2130. It overshot where I thought we would go, but still, if you got long, that was a really, really well done. I think while we're below $23, you have to still focus on the downside though. So support intraday should be 22. And while we're below 23, you have to remain bearish. Okay, real quick on Bitcoin. You guys probably already know my thoughts here. 49K support should be today, should be down at 45K. So, and I'm going to keep it all neutral right now. Okay. All right. There's your bias chart. I'm gonna capture this and I just got almost got hit. I've got 3 more pips to get more dollar Canadian. Almost there. So I'm going to take a screenshot of this. I'm going to pass it over to Steve. I think Steve's here. Morning, Steve.
He's not here.
Hey, what's up, Steve? How you doing, man?
How have you been with? Good.
I'm tired. I'm not gonna
Makes
lie.
Sense.
I'm tired. Yeah.
Makes sense.
I'm a little worn out, but overall it's good. I got a good night's sleep last night, but it still doesn't mean that I'm not, tired. So anyway,
What if you go for a little bit of driving?
What's that?
What if you go for a little bit of driving?
Yeah, that sounds like a great idea. What a great idea. I'm going to go drive around town for a little bit. I'm putting the bias chart in the chat room. Well, I'm going to pass it over to you because I am going to get the kids ready for school, and I'm going to take a shower and kind of wake myself up. So,
sounds like a good plan.
Hey, thank you very much for covering for me, so I could actually move my mom back into town. I appreciate that.
My pleasure.
All right, man. I'll pass it over to you.
Thank you.
Thanks, guys.
Hey, everybody. I hope everybody has had a nice, relaxing weekend. And let's see what this week will bring us. Let me open the question box. Perfect. So, what do we have today? We clearly have some dollar weakness. At the same time, we have a little bit of a pullback in stocks. Clearly, one of the two has to give, right? Meaning, if we are to see a continued weakness in the dollar and some kind of a bottoming here, which we need more time to confirm, obviously, if that's the case, then we need to see equities confirming that they bottomed out on Friday, and it's still an early call to make, right? We've had now, on the positive side, for those that are bullish, we've had a very nice reversal on Friday. If you're looking at the S&P, that reversal came from a perfect area. It was the confluence of this descending channel and the previous highs, lows, so support resistance area at 42.50. I know that we didn't make it to 42.50, but we made it to the upper end of this zone. And in order for us to actually turn higher, I think at the very least we need to see a daily close above 43.80, and obviously, absolute confirmation will come at a break above this channel, which currently passes from 44.50 roughly. Now, I know that somebody can make the argument here that look at the Nasdaq. The Nasdaq isn't looking, as decent as the S&P does, and that is true. The Nasdaq, for the time being, seems to be underperforming. So that's a valid argument. But on the other hand, it's not that the Nasdaq has really gone in crazy type of panic sell-off kind of mode, right? So admittedly, the Nasdaq is underperforming, and knowing how much the Nasdaq stocks have done to pull the market higher during the past few years, it is definitely a worrying sign if the Nasdaq starts to consistently underperform. But I think it's extremely early, to start making conclusions like that, right? Now, we're testing this 14,600 area, which is a support area. We break through that, I can easily see us attacking 13,900 to 14,000. 14,000, a nice rounded psychological level. Also, the 200 daily moving average is there. 13,900 previous resistance area. So, let's say these 100 points between these two levels can prove a very interesting, area for a bounce. But as I said before, let's first cross through this 14,600 area before we can talk about opening up that. Clearly, if the Nasdaq, keeps on being under a lot of pressure, probably the S&P is going to succumb as well, right? So, in my opinion, it's too early to call some kind of a big bearish market here. It's too early to call, on the other hand, a reversal on Friday, right? So as I was saying on Friday, I think the first days of this week are going to shape up things and give us a better understanding of what's happening here. I think that the market is still a little bit confused. We have information like tapering, so on and so forth, some economic data, some of them controversial or contradicting each other, having to do with which direction they want to be pulling the market, right? And I think the market needs a little bit more time to make up its mind. And the reason I'm focusing so much on the equity indices is because we know in this central bank centric economies globally, fortunately or unfortunately, everything starts from asset prices because that's what they like to manipulate more. I mean, they've said it directly, right? I mean, Ben Bernanke first talked about the goal of the Fed to, in essence, create like the wealth effect and everything else through the stock market. And we know how sensitive they are, to its movements, right? And we know, on the other hand, how risk sentiment affects directly bond prices, sovereign bond prices especially, right? And hence, of course, yields. And we know how much yields affect the FX world. So in essence, it's, like it or not, it's a chain reaction, right? That shouldn't begin there. It's one more things that the the central planned manipulation has created. Usually, the stock market was a byproduct. I mean, what happened in the stock market was a byproduct of what was happening in the economy, which directly, for all the obvious economic reasons, affected the FX market and bond yields, right? Now we've inverted that. It goes exactly opposite because the stock market is not left to react to what is happening to the real economy, and we are affecting directly or indirectly in multiple ways the stock market. Now the stock market starts the moves and the other markets respond to it, right? That's why I'm paying so much attention to it, because unfortunately, this is what we have, right? Now, speaking about bond yields, since I mentioned it before, I still see a valid argument that the US 10-year has bottomed in this corrective move, and we are actually breaking higher. I know that momentum is lackluster, the least to say, but I do think, on the other hand, that as long as we trade above like 138, let's say 139, the path of least resistance for yields can be to the upside, with whatever that means, right? And we all know what that can mean. For example, that means a lot if we're talking about the USD yen, right? So if that is the case, I'm not expecting USD yen to break back below the broken channel. I expect this to prove to be a corrective pullback and then a continuation higher. Now, admittedly, that doesn't say that much about the fate of the US dollar against other or many of the other FX currencies, right? Simply because, for example, we get a move higher in yields in the US, there is a very good likelihood that we're going to get a move higher in yields in, other areas as well. For example, the bonds, right? Because, let's say the treasuries and the bonds, in a big extent, compete for the same type of money flows, right? Like safe havens, let's say. Now, God knows why you would want to put your money in treasuries instead of bonds. Between the two of them, I only consider the bonds to be more of a safe haven than the treasuries. Plus, if you are anybody else besides a US citizen, you don't have to take that much of an FX risk as well, because don't forget, when you put your money on foreign bonds, you take two risks at the same time, right? One risk is the movement of the bond itself, and the other risk is what happens with the currency you've invested in, right? Because even if the bond does okay, If the currency drops a lot, then when you are about to cash out, you might find out that you've actually lost money converting back to your currency. So if you're a European buying treasuries, for example, treasuries might do okay for a period of time, but if the dollar has lost a decent percentage of its value by the time you cash out, you might end up having lost money. Anyhow, so yeah, we're seeing this reversal higher against the dollar. I mean, here's the euro having a very decent rebound. Here is the cable having a very, very decent rebound. And even more importantly, in the case of the cable here, the cable is now trading once again back within this triangle. So if confirmed by the end of the day, this might make this move a false breakdown, and the implications of that can be really bullish, right? So keep that in mind. Here is the Aussie breaking higher from this little formation. Admittedly, though, for a real break higher, we need to see a move close to 75 cents. So there is some distance to that. Here's the Kiwi producing a very nice reaction, but still some distance from breaking out. I can't say the same, though, if we want to talk about the Canadian dollar, right? Because in my opinion, this is one of the highlights of today, at least so far in the day. I know it's early. The Canadian dollar seems to be breaking higher against the US dollar. And since we're looking at the USD CAD seems to be breaking lower, right? Now, as I said, still early on the day, but if confirmed by the end of the day, this seems like a bearish breakdown in what was anyhow looking like mostly a corrective rebound higher. Now, if you look at the USD NOK, you'll notice that it's testing once again now the 200 daily moving average and the previous lows after getting a very nice rejection at the end of last week from this expanding triangle strand line resistance. And in my opinion, the chances that we're just continuing lower, of course, I have no complaints in that, I'm still involved with this, are substantially increasing, in case we produce a lower low. So bottom line, what I'm trying to say is that I still see a very, very big risk that the dollar might have already topped out and the equity markets might have bottomed down. Although I need to reiterate that we don't have confirmation yet, right? Probably the next few days are going to shape that. Now, another thing I'm looking at, I said that in advance, is this breakout from this 93.70 area, which we're now about to backtest in the DXY, right? So a nice rejection from a very interesting area. We had indicated even from weeks ago that 94.50 to 95 is a very, very formidable area of resistance for the DXY. Now, we got a rejection from there. If this rejection accelerates and it takes, the characteristics of a snowball effect, then there is a very good chance that we've found a high here, right? I'll need to wait for a little bit more of a confirmation, but breaking back within this triangle, is also going to, look like a false break higher, the exact opposite from what we saw in the cable, right? The cable broke down from a triangle and it's now trading back within it. And that starts to make, making this breakdown in the cable look like a potentially false breakdown. Now we break back below within this triangle in the DXY, which we're not far away from. It's going to start making this breakout in the DXY looking like a false breakout. Okay, so, these are the things I'm monitoring for the days ahead, today, tomorrow. It remains to be seen how fast things will escalate here. But as I said to begin with, the very basic element that is needed for that to happen is for the equities to at least stabilize. Okay. We can't really see the dollar playing ball to the downside if equities keep selling off, right? So, that's why I'm, first paying attention to equities here. Now, having to do with some of the commodities, metals, etc., you know very, very well that I'm not surprised by the fact that crude oil is now trading at, wait for it, 7-year highs. 7-year highs. Just let that sink in, right? Let that sink in. Also, let this sink in. It was less than 1.5 years ago here, right? It was less than 1.5 years ago when supposedly supply was so much higher than demand that they didn't know what to do with the extra crude oil. And we ended up, I know this is the continuation, you see the price having like spiked down to like 11. But I remind you that in the futures market, we had a month that we closed at minus 40, 42, 41, 43, something like that. So they were giving away crude oil, right? Now, if you really think that, the demand supply, equilibrium has changed that much within 1.5 years, I think it's not. I think this is a clear depiction, among other things, of how much, inflation is really affecting things. Of course, it's not only that, right? I remember back there with Stelios, we were saying that, people that were counting out crude have no idea of what's happening in the market, right? And I remember then when we started rebounding to $30, $40 that, I started saying again that, listen, I really think it's likely that I'm going to see $100 again. And that was considered to be ridiculous. Now we're breaking at 7 years highs. We're getting closer to $80. And now suddenly the 100 price point doesn't look like that ridiculous anymore, right? And I do think that this market is not done by any means. I don't think this market is done. I think we had a perfect type of correction back there. And I think this is a legitimate breakout. And I think you should respect this break to 7-year highs. Because usually when a market pushes to multi-year highs or multi-year lows, right, it actually shows the strength of the trend and not the opposite, right? This is not an indication that you should be fading it. It's an indication that you should respect it. Same deal with natural gas. Natural gas, very volatile during the past 4 or 5 trading days. Another monstrous day today. Another push likely to multi-year highs, to a close to multi-year highs, because I know that we spiked early last week, we spiked to higher highs, but then subsequently we managed to close at multi-year highs, which we didn't manage to do a few days later. And we might do that again today with a move that already exceeds 8.5% higher on the day, right? Keep that in mind. I know we have divergences and all that, and I'm not suggesting somebody should be buying natural gas here if you have absolutely no exposure. But on the other hand, trying to fade this market seems like a very, very dangerous proposition. And, I would really suggest you don't do that. Now, gold and silver don't really seem to care that much about any of that, since they still remain in corrective consolidations. Here is gold, here is silver. Admittedly, my long-term bias remains undeniably bullish in the medium to long term, but short term, I see no argument to be bullish silver as long as we trade below 2360, and no argument to be bullish gold as long as we trade below 1800, right? As simple as that. So, you can be as bearish as you want and be short as much as you like as long as we trade below these levels. Now we break above these levels, and I think it's going to be very painful to be in the other side of the market, right? And I think this more or less concludes my synopsis of my thoughts for today. And I'll be more than happy to answer any of your questions. If there's something I haven't covered or anything else that you want us to look at, I'll be more than happy to do so. Going once. Going twice. Okay then. So have a wonderful afternoon, and don't forget, Blake is going to be doing the daily roundup in 2.5 hours. So see you all later. If you need anything, just ping me in the chat room. Bye bye.